All right. Good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Apology for not jumping on a little bit earlier. We had a few technical difficulties here, but it looks like they're all straightened out and in moving onward here with those. Been an interesting day in the market. We saw global markets, take a little bit of a bump up, especially over there in Asia. Some of the emerging markets, took a small bump up, and so we saw that strength kind of wheeled itself into the U.S. equity markets here today. And then here today in U.S. equities, we've just markets pretty much where it opened up at. Just kind of been sitting here all day. It's typically the kind of gap that's fairly bullish. Why? Nice little gap above the 7-day moving average. We even talked yesterday where, the price action yesterday, if there's a gap up after that action, it's generally, bullish. This morning it wasn't, bullish to the point where I wanted to go jump in on the bull side. But I think it's kind of telling that we're not seeing a run up after that gap. Typically, that type of gap, we're going to see a run up. I mean, we saw it back here. We saw it right here. I mean, we have seen this happen time and time again in the market. But it is not happening here today. Now, one of the reasons we saw the markets open up with a little bit of strength were the banks were bouncing a little bit. We saw Wells Fargo gap up nicely. Now, since then, it has been, getting sold off aggressively as I think people realize that the CEO wasn't exactly, the issue at Wells Fargo, and Wells Fargo still has issues. And okay, CEO retiring. All right, does that mean a heck of a whole lot? No, not really. But a lot of stocks tied to emerging markets, rallying here this morning. The Caterpillars of the world, very bullish gap on Caterpillar this morning. I was watching it because I thought, personally, do I jump into some short-term calls today? Just kind of play some weekly calls on it. And I just didn't get that opportunity to get in. Even though it's just personal and I don't have to worry about sending the trade alert out and everything else, it just never settled enough for me to be able to jump in. But definitely a very bullish, type gap in terms of the short term, here for Caterpillar. We saw same action with Deere. Similar, price action. You can see Deere has been sold off from its highs, but we saw the same thing in like a FedEx, which we talked about yesterday, downgraded and then rallied yesterday. Not exactly the type of thing you want to be short on when that happens. Getting a little bit of nice fill the gap rally. I'll admit personally, I've been kind of watching for a point to short this, to play it down, to play some puts on it. I haven't seen the chance for that year just yet here on the day, but I do think ultimately that that will pay off. But when we look around the market and what's going on, it's same economic data story. A little bit of strength in the consumer sentiment number did bounce a little bit. But it's that same story of, the economy is still showing some growth, but that growth is falling, and we're not talking about contraction, right? So we're talking about kind of this second degree slowdown rather than a first degree slowdown, or second derivative slowdown rather than a first derivative slowdown, where a first derivative slowdown is negative numbers. Second derivative is this kind of positive numbers but slowing in terms of their growth there. You can see things like the bullish percent index for the bulls holding on up here today, and holding on up very nicely. One of the indicators that I mentioned yesterday, and you hear me mention a lot, this number of stocks above the 7-day moving average needs a big bump up to be bullish. This is a pretty big bump up here, almost to 74% here today, from about 40% earlier this week to about 74%. It's a massive bump up, and it's a very bullish style bump up. It is the only place where we are seeing some of the market internals, improve to a degree that, can change the market vibe. But we are seeing that. And in fact, if this is how the market closes, market vibe reading would be 2, and it would go back to a neutral reading, which would be the second bearish reading on the market vibe in the last month that, did not have a significant follow through or continuation. And, let's face it, we only had one of those in the last 3 years. So 2 this month with that. And, what do I take from that? Well, I take from that some of the strength in this market is pretty darn strong. That there's some artificial forces, in my opinion, holding a few things up. But when it does start to go, it's going to go, and it's going to go big. But when is it going to go? The signs that have come in about it, hey, it's happening now, they've not had, that follow-through element associated to them yet. Eventually they will. And, it's going to be one of those where not many people are going to believe it because they're going to go, well, nah, you know what, we saw this before and it just got bought up, and we saw this before and it just got bought up, and they're going to be kind of left kind of ouch, in terms of some of the downdraft. But I do think that that we will ultimately see it, but we do continue to see things held up. A lot of the futures rise overnight was due to S&P futures, or excuse me, the rise in S&P futures was due to trade talk. And the U.S. China and how they're going through and combing through the drafts of the trade deal and everything else. So, that definitely gave the market a little bit of a lift here. Into today. I also, in my comment this morning, I brought up this idea of window dressing, and this isn't something, this is a very popular topic when it comes to the end of a year. And especially end of a year that's been bullish, where there's this window dressing component for fund managers, where they take a look at a stock like Apple and they go, well, Apple's done great on the year. I want to make sure that when the stocks that my fund is in, when those go out to the investors, that it has some of the top performing stocks on. I may not have ridden Apple, but I want to own it by the quarter end so that, my investors can see, hey, you know what? They own Apple. It's been one of the best performers. Because, look, that's what gives them the comfy feeling. Most people, they're looking backwards, not forwards. And so it's one of the things we do see fund managers do out there in the market. Now, I brought up window dressing here this quarter and going into quarter end. Why? Well, not speak to say that, hey, you know what, that's absolutely what's going on. And we typically don't see a lot of it at quarter end. In fact, at quarter end, we sometimes see some more profit taking or some trimming of positions. But in this case, the first quarter this year has been a record quarter. It has been an absolute anomaly for the markets. It has been an absolute beast mode first quarter for the bulls, and something that, is so outside of the normal distribution in terms of market performance that, fund managers are generally going to be a little bit behind the curve. And so if you're a little bit behind the curve and you're having to send out a statement to your to your investors saying, hey, you know what, the market, it's up. What's the market up so far this year? Let me just pull up the exact number here. We'll just pop on a performance chart here. And we'll go year to date. So the SPY year to date is up over 13%. That's a monster quarter for the S&P 500. It's an absolute monster quarter. Most fund managers are not going to be showing 13% gains there on the quarter. So what do they have to do? Well, they have to go and get rid of the stuff that's been lagging here so far this year. they have to go shed some of it. The Halliburtons of the world, they don't want those on their portfolio, right? Halliburton's up, but it's lagging. The overall market here. And so we see a little bit of distribution, not a ton, but some of the top performers that have been out there. We see a little buying into them here today. Some of the Microsofts and Adobes of the world, where these fund managers need to have these stocks on their portfolios. Now, window dressing, it's almost impossible to quantify overall of how much and where is it happening. It's one of those things that happens out there, and we can theorize all we want, and we can kind of use it to explain some of the things that are happening out there, but we can't look at a chart and go, well, this was window dressing or that was window dressing. No, we don't know what funds are making what moves what day, and if they're actually doing it for that purpose. But it is a common practice, and we tend to see it happen more on years that are up or down big in the market, or quarters or months that are up and down big. So I do think we're seeing some of that happening out there today. Now, what does that mean going forward? Well, generally, window dressing gets erased pretty quickly because, fund manager, they may go jump into Microsoft just to have it on their board at the quarter end. But they're not jumping into it because they believe in it. So if it starts to turn, they tend to be a little more jumpy in terms of jumping on out. Or if they really believe in a stock, and they say, you know what, I really like this stock. I know it's been lagging. I know it's done no good over this quarter. I'm going to sell it here, but I'm going to buy it back at the beginning of the next quarter. And so some of the things that dip, we actually see pop back up into the coming quarter. So I do think we are seeing a little bit of that, some elements of that out there. I've heard some talk here today about last Friday, and kind of comparing today's, and this is just a virtual account. Sorry about that. Thought I had the live account up, but I'll just go into the virtual account because it'll show the same thing. But I've heard some talk about the Friday sell-off in the market, and kind of comparing today to this Friday sell-off and saying, hey, you know what? Last Friday we saw kind of a gap up, and then we saw this kind of roller coaster downhill. I don't think it compares at all. The magnitudes are very different, and even on the gap, and then on the shot down that we saw this morning, where the market sold off about 10 points, that was nothing like what we saw last Friday in terms of volume. Nothing like that in terms of magnitude of change. Last Friday was a very different style day than we've seen here yesterday, even on yesterday's kind of sell-off and today's kind of midday sell-off. But if you look at where the S&P is relative to Friday selling, well, it's right at the retracement, right? I mean, we're right up here, 2635, 2637. That's the 62% retracement. And so, this entire week has basically ground back to retrace Friday sell-off, and that's what this week has been, here in the markets, and into the end of this quarter. I did make a comment earlier this morning, talking with one of you, that the market kind of had a little bit of an eerie feel, in terms of its lack of responsiveness, to some things this week, and over responsiveness to a few other things. I think what I mean by that is that the risk of sharp, fast drop is elevating here throughout this week, especially when we look at the volumes and the upside volumes. When the market has made these upside bounces, the volumes have been very, very light. we haven't seen this really heavy type bullish volume out there, and it does kind of look like one of these rallies, like this October, end of October, beginning of November type rally. It kind of feels that way. Obviously, the metrics are a little bit different, the dynamics are a little bit different, but it's one of those that could still easily, that 290 area and 300. I think if you're looking at this market and you look and you say, hey, what's the risk factor? That's the risk factor you still have to quantify out there. But I think this is one of the first markets in a while where the upside return potential is actually less than the downside reward potential. And we can see that in individual stocks and short-term charts and things like that. But when we look at this market fundamentally in terms of margins, valuations, and revenue growth, and we look at the market technically from a daily, weekly, monthly type standpoint, I think this is one of the first markets in a while where we can say that, look, if it goes higher, it's going about 20 to 200 to 300 points higher. If it goes lower, it could be significantly greater than that. And I don't think we've been able to say that. We haven't been able to say that most of this year. It's one of those elements that's definitely in play, and has to be accounted for. Now for the challenge. I have two positions. I have Home Depot, which I continue to hold here. It's just been chopping between 189 and 192. Here it's worth about $200. I'm not going anywhere on that. It could really help the challenge if it did get that sell-off, but there's still no sign of it. It still has not even broken the 7-day moving average. I'd love to see what happens when it breaks that 7-day moving average. I do think that when it does break that 7, it is going to see some sharp selling, but so far it has not. And then I have the EEM, which I picked up earlier this week. I picked it up on this up day right here on Tuesday. Yeah, it fell a little on Wednesday, bounced a little back yesterday, and then today gapped up as we saw a little strength in overseas markets. Gapping above the 7, which, you'll notice, and I made the comment earlier, isn't as significant when it comes to the EEM. But, just like the EM normally does, kind of gaps, and, that's kind of where it ends, somewhere pretty darn close there to it. And I bought the option that I did to be able to weather some chops, some up and down. I did look and say, all right, do I pull everything off and, take the $1,000 and decide, hey, you know what, let's, or $1,200 and let's just go and, let's find a short-term trade and grow that. And I think if it weren't the end of a quarter, I would be a little more apt to do that. But I would like to hold it over the weekend and see what Monday brings, because the way this market has moved today, if there is a gap down on Monday, I do think it gets sold aggressively. Now, Monday will be the first day of a new month, and so we will have a couple periods during the course of the day where we see some rallies as some money is forced in. It doesn't mean the market has to be up that day, but the chance of having a huge down day on Monday, I think it's pretty slim. But I do think it can create some, I think it could create some angst out there in the market if we do get a gap down on Monday and, it doesn't get completely erased. I think that will, lead into some further selling as we start the new quarter of, quarter 2 here in April. All right, so that's where I'm at with the EEM, Home Depot. I'm not making any changes on them here, just yet. As far as setups and downside setups specifically, on the stocks on my watch list, things haven't changed, meaning, it's not like I can look at Caterpillar, which I've been looking at and saying, okay, what if it breaks the lows from the prior day, pretty much since Wednesday when we saw that kind of downdraft. All right, now if those get broken, that's my signal to go. They just haven't come in. FedEx, Caterpillar, even Halliburton, it hasn't, those signals haven't emerged. They haven't, they haven't come in and given me anything to really go after. I did mention yesterday that personally I picked up some longer-term GLD options, a longer-term position that I'm looking to add to. I haven't added to it here yet. Probably something I'll do over the course of the coming weeks. I'd love to add some GDX, but still haven't done that as well. So for me, who looks at the market with a little bit more of a bearish eye, I haven't had a lot of entries, to really kind of sink my teeth into and say, hey, you know what, this thing's golden. I want to go. Let's go. And a lot of things I think are just kind of a little more in that bullish mode where you can say, hey, you know what, if you're bullish and you really are on the bullish side of this market, you know what, you can buy a Microsoft, use the low from the prior day as your stop point and go, right? And we see that working with, even some of the stocks that I'm bearish on, a FedEx, which, continues to break the high from the prior day. And so you can be a buyer using the low from the prior day. And, that setup is out there. We're not seeing a lot of, really kind of new trend type setups emerging. You look at something like an Apple, it's not like, we're talking about a new bullish trend emerging or bearish trend emerging. I do think this is a very troubling volume pattern here for Apple. But, for Apple to go hit 200 and then, cave a little bit, would not be too surprising. But I think from a bullish side, it's that simple. It's, hey, buy what you like, use the low from the prior day, and go. And I don't think it gets much more complicated than that. On the bearish side, I think it's, hey, you still got to sit on you either have to have some time and let things, develop and trust the metrics that you see, or you have to kind of hold on, just wait, keep some powder dry for for some of the potential breakdowns that the metrics suggest will ultimately come here in the market. Alrighty. So anyway, that's challenge thoughts. Some trade thoughts here. Now, yesterday, this week I've been alluding to a new product that we're releasing here today. It has gone live, and it is live here today, and it is the Trader Minute Academy. Now, this is something that many of you that hear my voice have suggested we do over the years. That we put together, some of the top trainings, that we've given over the years, and that we put together those in a way that, they can be referenced easier than digging through a video library or something like that. And that has been released. Now, this is also released to where somebody can come in and purchase it and, get a lifetime access. If you hear my voice and you are a member of Trader Minute, you will have access. There's no charge here on it. Those accesses will be coming. But bottom line here is you can come in. You'll be able to come in. I'm just going to log in, and there are a couple things here to show you. Number one. Now, the basic training, you will most likely have heard everything that I say there. But then, there's stuff on building a watch list and different thoughts and ideas, charting and technical analysis. And you'll hear, Josh, Carl in some of these videos, just some different things on the market, top and bottom picking, talking about covered calls, market corrections and pullbacks, oscillators, fundamental analysis, the basics of it, getting into some more advanced fundamentals, market interpretation, the market vibe, and kind of how to break all that down, and then everything here on options, to pricing options, to doing different spreads, to straddles and strangles, to pinning, and those types of things, and then some stuff on the challenge as well as market mentality, all in here. There will be more video content that gets uploaded over time, that gets put in here over time, but all of that is in here and will be available for you to view. Also, the market vibe. Vibe. It is automated. It will be published every single day here in the TM Academy, along with the performance metrics. So you can always come in, see the performance metrics, see where the market vibe sits relative to, where it's been, and see, whether it's trending bullish, bearish, or whatnot there, with it. And then occasionally I'll jump on and, upload a little bit of video or commentary about what the market vibe means at that point, and and go from there. As we go forward, I'm going to be doing a little bit more work with the market vibe. I've been using it to trade and trade the market itself, and it is something where I could go back test it, but I want to do some live elements there. I've been doing it for quite a while, and it's been very, very successful. And I do want to show that here to you, and how to trade it, and to just kind of use it, again, outside of a challenge. I know a lot of times when you hear my voice, it's in this challenge mentality, but there's so much more to the market as well, right? And being able to use this market vibe outside of that challenge mentality to really really boost some performance, and really boost your portfolio over time here. So we'll be taking a look at that, and doing that here as as time goes by. But should be next week where you get the access here to it. But it has been launched, and is full go here. Here with the TM Academy. And again, this is version 1.0. There are plans for some additional things to be added. You'll see some blank space here, and that is, there are plans for a few other things to be added and to be put in. And ultimately it will continue to evolve. I don't have much to do with it. I'm not a developer or anything like that, and they just took a lot of my videos that I've done over the years, and aggregate them, putting them all in. But it's exciting to see it finally come to launch, and it would not exist without the recommendation and suggestions by many of you. Thanks for hopping on. Have yourselves a great one. I'll put some of my final thoughts in the message feed here today. If nothing major happens, if something major happens, I'll jump on video, go out and take a look at it here with you, and we'll go from there. Have yourselves a great one, and we'll talk to you later. Take care.